Unfortunately, for those with a mortgage, of course, if you don't have a mortgage and you have some savings, that's a good thing. But it does look like it. There's a number of pressures building which suggests that the Reserve Bank can't be comfortable with the inflation outlook and will have to slow the economy down a little further.
Would a 25 basis point rise tomorrow see the RBA return inflation to its current target of 2 to 3% by mid-2025?
Certainly that would be the Reserve Bank's hope, and it gets us closer to that target. It depends, of course, a lot on what comes from here, things that we don't know about, things that are difficult to predict. But I certainly think that it's more likely to get the target band back, get inflation back to that target band than if they don't do it. The question then becomes, of course, is it enough? And the jury is still out on that one, although I think that one more probably is at this stage.
The Treasurer has flagged axing some big infrastructure projects to help dampen inflation. Will the government need to do more to any hikes from the RBA?
Certainly the government has a role to play in really slowing the economy down to meet the conditions that we currently have. And of course, at the moment, with so much infrastructure spending going on, even though the consumer is slowing down, other parts of the economy are running quite hot. And so what they're trying to do there is take away some of that heat so that it can complement, I guess, what's going on with the consumer. However, in saying that, there are other things, of course, that the government could be doing in terms of its other spending programs to slow them down. Now, a lot of those, of course, it doesn't have control over in the sense that, they're demand-driven, they depend on the number of people that rely on government payments, etc. But there are certainly some tweaks that it could make to slow things down a little bit too.
And what are they?
So we could, for example, have more tight spending on the NDIS. Now, this is an area the government itself has recognised has spending running away. It's moving forward at a rate which is just unsustainable, over 10% a year. So that would be one example. There are probably tweaks and cuts that could be made across a whole range of government programs without making too much of a difference. These two might just at the margin help that inflation trajectory.
How much longer will the strength in the economy continue to surprise? Australia's jobless rate remains near a record low and house prices are pushing a historic high.
Certainly are, and I guess one of the reasons that we've been surprised by the strength of the economy is because migration has been so strong. Of course, when you have lots more people entering the country, then clearly that increases retail sales, it increases the demand for housing. These sort of new sources of demand are something that boosts GDP. On top of that, of course, the international environment does matter. In some senses, we had expected the global slowdown perhaps a year ago to have been more harsh. It hasn't been too bad. Many of the countries that we thought may have moved into recession have managed to also hold up. So these are important too for a small open economy like Australia. So there's a lot of good news in there, and certainly we don't want necessarily the economy to fall into recession, but it is making life a little harder for the Reserve Bank.
Cherelle Murphy, good to speak to you.
Pleasure.